So good afternoon, everybody, and good morning to some of you. My name is Martin Czech, and I'm the Chief Executive of the International Capital Market Association. And it's a great pleasure to welcome you all to this ICMA virtual event on Panda Bonds, market developments and outlook. We have a first-class agenda today covering all aspects of the Panda Bond market infrastructure, market regulation, as well as the many noteworthy developments and trends in the market. These will be discussed today by market experts based both inside China and in other countries. And I'm particularly pleased that NAFMI, which plays such a pivotal role in the Chinese interbank bond market, is able to speak to us today. We have issuers, underwriters, investors, law firms, and rating agencies participating today. And I'm very grateful to all the speakers for your contributions and very much looking forward to hearing from you. Now, just a few words by way of introduction, if you'll permit me. As you know, ICMA's mission is to make the international debt capital markets operate as effectively as possible. And we focus our attention on the primary markets, on the secondary markets, the repo and collateral markets, and the ever more important sustainable bond markets. And all of these segments have great relevance to the Chinese bond markets. At ICMA, we have now some 600 institutions as members from all over the world, based in over 60 different countries, including China and many other Asian countries. The membership includes issuers, investors, intermediaries, and market infrastructures. And we have noticed an increasing level of interest from this community in participating in the Chinese bond markets. Why is this? Well, it's a function of size and the increasing opportunities for international issuance and investment in the Chinese bond markets, in line with the internationalization of the renminbi and the step-by-step opening of the Chinese financial markets. China is now the second largest bond market in the world, with over $15 trillion of bonds outstanding, and has been taking a series of steps to internationalize its financial markets for a number of years. Panda Bonds, which are renminbi-denominated bonds issued by foreign entities, are one of the key topics in the spotlight. In 2005, Panda Bonds first came into the market, and initially it was the multilateral development institutions that were allowed to make use of the instrument. From 2016, Panda Bonds started to gain in popularity, and the positive signaling from regulators spurred further market development. And additional liberalization of regulation has also now allowed corporates and banks to tap the Panda Bond market. And by the end of 2019, the cumulative registration of Panda Bonds reached some renminbi 800 billion, with the issuance totaling some 375 billion renminbi. That's about $60 billion. The vast majority of this was issued in the Chinese interbank bond market under the guidance of the PBOC and the relevant self-regulatory body, which is NAFMI. But to put this in context, Panda Bonds still account for less than 0.5% of issuance in the Chinese interbank bond market as a whole, so the potential for growth is very substantial. And we're going to be hearing more from NAFMI on the first panel, but they play a pivotal role in this market development. We saw this most recently at the end of September 2020, when they published detailed rules helpfully clarifying the issuance and registration processes, the disclosure requirements, and the underwriting arrangements for corporate Panda Bonds. And we expect further guidance to be issued for SSA issuers. And it's encouraging to see that the issuer base for Panda Bonds is becoming increasingly broad, as more and more non-financial corporates have been turning to the market to raise cost-effective and flexible finance while diversifying their funding sources. In fact, the bulk of Panda Bond issuance is now by non-financial corporates. This complements the ongoing issuance by financial institutions, international sovereigns, and supranational bodies. We will also be discussing the investment universe for Panda Bonds, which comprises both domestic Chinese investors as well, increasingly, as the international investment community. And I'm sure we'll explore the reasons why they're excited about investing in Panda Bonds and some of the challenges in doing so. To conclude my opening remarks, I want to emphasize that Asia's capital markets are of immense interest to ICMA's broad membership, both within and outside Asia. And the sheer scale of China's capital markets sets them apart. We're grateful to our members in China and in Asia more generally for their support, and we're looking forward to continuing to work with all of you. So I very much hope that you find today's webinar of interest. It is an exciting topic, and again, I'd like to thank all the speakers and panelists very much for their contributions. Let me now hand over to Mr. Kun Hu. Mr. Hu is the General Manager of Investment Banking and Asset Management at Bank of China. He's based in Beijing, and we at ICMA are very privileged that Mr. Hu is also a board member of ICMA. We very much value, Mr. Hu, the perspective that you bring to our board. Mr. Hu, I look forward to hearing your comments. Please switch on your camera, and we all look forward to your comments.
So thanks, Martin. Good morning and good afternoon, everyone. As a witness and participant of this market, it's a great pleasure to have this chance to share my knowledge and experiences in this fast growing market. Actually, start my speech, I still want to quote the two wordings come up from the Martin Wolf in Financial Times. When we first talking about opening the CIBM market to the outside world in 2016, Martin Wolf used two words to describe the CIBM market. That is too big to ignore. Another one is too weak to enter. I think these two wordings definitely can be the best one to echo today's two topics on our two panels. So I think in the last 5 years, we have already seen the fast growth of foreign investors entering into the CIBM market. I still remember in 2016, the size of the foreign investors to invest on the CIBM is around 400 billion, but now it's already up to 2.7 trillion RMB bond holdings. And in terms of the Panda Bond market, I think after the Daimler reopened this market by raising 2 billion RMB in 2014, I think up to this year, is all the Panda Bond issuers come up to 51.2 billion on the issuer side. I think it's already be a best number to show this fast growing speed. And even in this year, affected by the COVID-19 pandemic across the world and also in China, this year we have 22 issuers and 34 deals in China Panda Bond market. And if we talk about in terms of the issuer type, we have already seen financial institutions, sovereigns, corporates, and most importantly, like today showed to the panel, we have NDB and AIIB, all as a multilateral financial institutions to issue the Panda Bond in China CIBM market. I think it's already gradually be a broader issuer base and broader investor base. And that is, I think, is a good one to answer. It's a big market. It's the one already show the central government make the decisive move that we will be the firm one to deeper opening up our capital markets. So it's a one we should get into. And secondly, I want to answer is too weak to enter. I think when we talking about the Panda Bonds with Daimler in 2014, it needs a lot of discussions on the infrastructures. on the regulatory framework, even on the accountant standards. I want to quote the recent development to show what have achieved by our regulators like PBOC, Ministry of Finance, and NAFMI. In September 2018, a set of Panda Bond guidelines were released jointly by PBOC, MOF, and NAFMI. Especially, I want to mention is NAFMI. In February 2019, NAFMI released its first Panda Bond guideline designated for non-financial corporate issuers, which outlines specific requirements for corporate issuers on key matters, including program registrations, information disclosure, and the Ministry of Finance of People's Republic of China specify the filing requirements for offshore auditors to carry out auditing services for Panda Bond issuance, which address the auditing concerns for Panda Bond issuers. And just in the September of this year, NAFMI decides to further simplify the issuance procedure for qualified regular issuers. And today, we also have Senior Director Mr. Wu Yanbing from NAFMI attending this panel to interpret how the new DFI rules will be applied. I think the constant improvement in the rules and the regulations have laid a solid foundation for the healthy and sustainable growth of this Panda Bond market. And what for the other market participants? I think the market functions is becoming increasingly complete. In 2016, we started to provide market making services for NDB's Panda Bond issuance to enhance the liquidity in secondary market. And repo transactions was also opened on that year. Now we found that Bond Connect has been used frequently to help interested foreign investors to participate in Panda Bond issuance. To better protect investor interest, the trustee scheme has just been built up recently in CIBM market. So all of this, I think the market infrastructure development aims to lubricate the deals and save the transaction costs for all the Panda Bond market participants. We are inspired and proud of this progress made in this Panda Bond market, and I would like to attribute it to all the participants. Sitting here are all this webinar are all the representatives from regulators, issuers, underwriters, and the legal counsels. I think then what we will expect the future of this market. With courage and confidence, I would like to describe the future Panda Bond market as innovative and more ESG caring. I'm sure there will be more AIIB's COVID-19 combating bonds products alike arise, just like what we have done in this year. It will also be more integrated with the international market, not only attract more international participants, but also keep absorbing the best practice of this mature international debt capital market and evolve continuously. Most importantly, I expect the Panda Bond market to be promising, which means issuers can broaden, the investor base can dramatically increase, and we will have built up a stable and convenient funding place for all the issuers. So I would like to stop here, and I look forward to listen to the inspiring thoughts and sparkling conversations from the panelists and attendees. Thanks all for your listening. Thank you, and give the floor to Martin. Thank you.
Thank you. Thank you very much indeed, Mr. Hu. I think that's a very encouraging comment to make, that you believe there's going to be further integration with of the Panda Bond market with the international issuance and investor community. That's good. So that actually is a very good setting for our first panel. And I would like to introduce Rico Zhang. Rico is a senior director. He's one of my colleagues. He works in our Asia Pacific office, which is in Hong Kong, which is where we service our Asian members from. And Rico, if you would turn on your camera and invite your panelists and introduce them, and I'm looking forward to hearing your panel.
Thank you very much, Martin. Indeed, it's a great pleasure to present the interesting discussion. As you know, the Panda Bond market started 15 years ago. Along the way, regulatory support and the clarity have been always key for its development. In 2005, only a couple of institutions issued Panda Bonds. The market really started to take off in 2016 with different types of the issuers, including SSAs, financial institutions, and the non-financial corporates. Chinese authorities have also gradually shed light on other important questions, paving the way for international issuers to access the Panda Bond market. Measures include simplifying the issuance process, clarifying the permitted use of proceeds, establishing rules for placing Panda Bonds privately, specifying disclosure requirements related to different accounting standards and audit rules, etc., etc. So every regulatory and policy move can be crucial to direction of development of the Panda Bond market. We are here today with industry experts to dissect the regulatory landscape of Panda Bonds from an international market perspective. I'm very happy to be joined by my fellow panelists. They are Lavon Sulatan-Rev, Director General, Treasury and Portfolio Management, New Development Bank. Richard Mazzucci, Partner, King & Wool Medicine. Yanbing Wu, Senior Director, International Cooperation Department, NAFMI. And last but not least, Bo Su, Head of DCM, Bank of China. So my panelists, please take on your cameras and also unmute yourself. Let's kick off the discussion. So if I may, I want to first turn to Yanbing. Maybe you can briefly introduce what is the regulatory landscape of the Panda Bond and how did it evolve? And what are the rules that a potential issuer should know?
Okay, thank you, Rico. Good morning and good afternoon, everyone. I'm happy to take this opportunity to briefly introduce the regulatory landscape of Panda Bond. The interbank bond market is China's main bond market, and foreign issuers mainly issue Panda Bond in the interbank bond market. The People's Bank of China, PBOC, which is the China's central bank, is the government regulator of the interbank market. And NAFMI is the self-regulatory organization responsible for the self-regulation of interbank market. The development of Panda Bond markets can be roughly divided into 3 stages. The first stage is from 2005 to 2013. PBOC and 3 other ministries jointly released and interim measures for administration of Panda Bond issued by international development agencies. And then ADB and IFC issue Panda Bond in association in accordance with the interim measures. And the second stage is from 2013 to 2018. PBOC and NAFMI promote the pilot issuance of Panda Bond issued by foreign non-financial corporates, financial institutions, and foreign government agencies. At that stage, we have seen issuers such as Daimler, Bank of China, Hong Kong, HSBC, and Korea government issuing pilot Panda Bonds. And the third stage is from 2018 to present. PBOC and the Ministry of Finance issued the new interim measures for administration of Panda Bond, replacing the older measures, laying the foundation for the current Panda Bond regulation. The new measures specify the rules for the issuance of Panda Bond by 4 types of institutions. Among them, foreign non-financial companies, foreign governments, and international development agencies should register with NAFMI for issuing Panda Bonds. And foreign financial institutions should apply to PBOC for issuing Panda Bonds. The new measures specify matters such as issuer qualifications, custody and settlement, information disclosure, accounting standards, and auditing issues. In 2019, NAFMI issued the guideline for non-financial company Panda Bonds. The guideline further clarify matters such as the registration, issuance, underwriting, information disclosure, and use of proceeds. And currently, we are formulating the guidelines for the SSA Panda Bond issuers. So the above is the overall situation of Panda Bond regulation. Thank you, Rico.
Thank you very much, Yanbing. That's a very good summary about the current development so far. Lavon, maybe I want to turn to you. As a Panda Bond issuer, what experience can NDB share on issuing Panda Bonds? And how does regulatory changes impact NDB's Panda Bond issuing strategy and the market more generally?
Thank you for the question, Marika. And I would like to also share my respect with present here panelists. And thank you to Mr. Hu, to Mr. Subo for the continued support of new development banks since establishment. As you know, we are 5 years old this year. And our first debut bond issuance as a multilateral development institution has been completed just after 1 year of existence of the bank, with the support of Chinese government regulators. And we appreciate that we were the first multilateral development institution that has managed to make this inaugural issuance in the green bond format, which is compliant to the ICMA principles as well as PBOC guidance. So we have introduced Ernst & Young as a certification agency and provider of assurance to confirm our compliance to the criteria of the green bonds. So since then, we already may say about ourselves as an institution which became a reputable and regular issuer for the domestic bonds at the Chinese market. So we were the first multilateral development institution, as Mr. Wu just now mentioned, in the just further development of the regulatory environment in China. We were the first multilateral institution to register a bond program in China. And under this bond program, we have made the first step of innovative issuance out of this program for the 10 billion RMB dual tranche for 3 and 5 years last year. And we have currently utilized the full program, which was the first one, And last month, thank you for the NAFMI for cooperation, we have registered the second bond program for the amount of 20 billion RMB. And we plan to do a successful issuance going forward next year. So we, in our approach, use also the opportunities and development of all aspects of the domestic bond market in China. And in a way, if we look through the structure of our issuance, so the 2019 issue has attracted 44% of the allocation of offshore investors. Most of them were coming through the Bond Connect. If we look at the distribution of the bonds this year, we have more than 56% distributed to the offshore investors. This is a great success in a step forward, which we develop together with our partners, investment banks, Chinese and global, trying to attract to the Chinese markets investors coming from abroad. Those are central banks, official institutions, sovereign funds, which increase their proportion of reserves in Chinese currency RMB. And we use this opportunity to bring foreign investors to attract them by our projects, by our initiatives to invest into our bonds issued at the Chinese market. I would like also to mention to you and to the audience that this year in May, we have approved Sustainable Development Financing Policy Framework. And going forward, we plan also to do an issuance out of this newly registered bond program in China. The bond which would be compliant to this framework. And we have already engaged Sustainalytics to be a second party opinion provider for our both issuance domestically and globally. With this, I would like also to mention the achievement which our bank, together with arrangers and present the Bank of China, made this year. We were the multilateral development bank which has ever issued the largest bond in China, 5 billion RMB, which was labeled as COVID combating bond. And we would going forward to be as innovative as we would like to be. Thank you very much.
Thank you, Levon, and also congratulations on those achievements. I think that's very important and also show the true opening of the Chinese bond market with international issues and investors on both sides. Bo, I think I want to turn to you as to share the experience from the underwriters, because to a lot of audience, particularly sitting in Europe, maybe you can give some colors at how different it is to set up a Panda Bond program compared to a more standard EMTN program.
Thank you, Rico, and good afternoon and good morning. So first of all, I would like to thank ICMA, Mr. Sheikh, for organizing this webinar. I think this gives us the opportunity to share with you the tale of the Panda Bond market, and thank all of you for attending. Bank of China enjoys a time-honored history and high degree of internationalization, and we are the most active player in the Panda Bond market. we are one of the largest bank in China domestic market and the leading DCM house in Asian markets. We set global DCM footprint by establishing DCM centers in Hong Kong, Singapore, and London to cover both issuers and investors in the EMEA, Asian Pacific region, and Americas, giving us the most solid infrastructure to engage in the Panda Bond business. Bank of China itself has also benefited a lot from the Panda Bond executions. On this platform, we have the opportunity to introduce our experience in the international DCM business to the domestic market and to serve the most mature and sophisticated issuers and investors, as well as cooperate with most seasoned peers. The result of our DCM foundation, after more mentioned, is that Bank of China has become the DCM house that executed the most number of Panda Bond transactions and having the largest share of Panda Bond pie. We are pleased to be able to bring high quality issuers globally to participate in this market. And I'll share with you today on the most recent Panda Bond regulations development and ways to enter the market. And first part on the regulations on Panda Bonds. I think in recent years, the introduction of a series of new regulations on Panda Bond markets marks a major upgrade in the policy system. Based on years of opening up of the CIBM and the accumulation of Panda Bond practices, the new regulations further smooth the way for issuers and make the markets more in line with the international norms. This involves a very solid evolution process, started from earliest ADB and IFC Panda Bonds, and to later the Daimler Panda Bonds in 2014, which almost formulates the NAFMI corporate issuers model. And then different types of issuers like the supers like NDB and AIB, sovereigns like Hungary, Portugal, and bank issuers tapping into the market. So as issuers become more diversified and specific problems also arose, including like differences in the way and contents of disclosure, differences in guarantee structures, like BMW has benefited from the new rules to have adopted the structure they usually use in the international debt capital markets, and also how to differentiate in details of disclosures by issuers of different categories to accommodate both issuers and investors. According to those practices in the past 2 years, PBOC, MOF, and NAFMI have revised a set of rules and have put forward solutions to address these problems in a targeted manner. And second part, I'm going to talk a little about how to construct a Panda project in a bank's way. I mean, for issuers, especially for many of the new issuers in Panda Bond market, it would be a journey into the large and fast-growing market. Much to expect, but also always just bear in mind that it's an unfamiliar market as well. So it might be worthy to choose the best team rather than a cheaper one. And the most important quality, if not the only one, is rich experience. Experience really matters. If you choose the syndicate banks, you probably need at least one large local bank in China, which with rich experience in Panda Bond execution, such as Bank of China. So we have accumulated lots of knowledge so as to have the capability to design a suitable structure to obtain registration and how to construct a proper market strategy. Also, we know where the targeted investors are, and you may also need to consider the international banks that you have partnered with in the international markets. They may know you better and have a strong presence in China as well, and cooperates closely with Chinese banks. For counsels, for lawyers at present, there may maybe just a few law firms with proper team in the market with Panda Bond experience. They obviously have more professional headcounts to cover the project execution. We also strongly recommend issuers to support the syndicate to hire a lawyer firm. After many cases, we conclude this measure significantly reduce communication costs. Such practice is indeed a market norm in the international bond market, but not necessarily is for local bonds in the Chinese market. And third one, it should be noted that the Chinese market has formed its own operating methods through the years. Indeed, there are lots of similarities with the international EMTN program and the seasoned Panda Bond issuer scheme. However, there's still many differences. You'll be interested to find out that the differences lie in the issuance documents, the habits during road shows, the signals to the market, the way of bidding in the market, the investors' order habits, swaps after issuance, and so on and so forth. So all in all, China is adopting a dual circulation development model, which paves the way of a more open and welcoming gesture from the financial markets. Panda Bond is just at the front edge, yet I have a lot of potential to provide opportunities now and in the future. I think I'll stop here and leave floor to Rico. Thank you.
Thank you, Bo. I think that's very comprehensive introduction of the Panda Bond market so far. Maybe we will touch on some legal consideration as well. Richard, from documentation perspective, what are the disclosure requirements for Panda Bonds? And maybe you can share some differences on disclosure that an international issuer should take note of. And maybe beyond that, any case studies we will appreciate.
Thanks, Rico, and hello to you all. Our role on Panda Bonds is to explain to our offshore issuer clients the differences between issuing offshore and issuing on the mainland. And we give that advice with the benefit of our teams in the PRC. Our clients tend to be highly rated issuers that have offshore programs that they would like to replicate to the extent to which they can in the Panda Bond market. Our issuers are very enthusiastic about issuing in China because it's an efficient, deeply liquid market with a very sophisticated and diverse investor base. The aim is always to avoid reinventing the wheel if we possibly can. The issuers want to disclose the same information, if possible, in the mainland market as they do offshore. And that makes sense because the information they have provided offshore has been verified. It's been the subject of extensive due diligence to the highest international standards. And issuers want to treat investors onshore in the same way that they treat investors offshore. And that's largely the position we get to on Panda Bond offerings. I would add that's a similar approach we take to underwriting agreements. We try and give to investors the ability to take protections that they're used to in offshore underwriting agreements in the onshore markets. But obviously, disclosure standards are set by mainland law. And my experience as an offshore lawyer is that mainland law in respect of securities offerings is largely similar to securities law offshore. An example is the securities law, which was amended earlier this year. And that law sets out the disclosure standard that needs to be met in making an offering in the mainland. That law describes the standard as being that the information needs to be the information which investors need in order to be able to make an informed decision. And those of you that are lawyers on the call will know that that's language similar to disclosure standards that we are familiar with offshore. The information must be accurate and complete. Those who are involved in the issue, the publication of the offering circular, are liable, including the accounting firms and law firms, to the extent to which they don't hit that standard. The defence is if they can demonstrate they are not at fault in their participation in that disclosure. What does at fault mean? Well, that is not defined, but our advice is that at fault means that you've conducted a due diligence in respect of the offering material. And as I've said, international due diligence should meet that PRC standard. So our approach is to look at what information has the issuer disclosed offshore. For some issuers, that's relatively straightforward. That information is already set out, for example, in an EMTN offering circular. And in some cases, we simply lift that information from the offering circular. Some issuers come from a jurisdiction where they incorporate by reference. So we need to look at the source data to see how to draw from that data to see how we can use that for a disclosure in our offering circular in the mainland, because we can't incorporate by reference in the mainland. Sometimes there's more to do than that, because we sometimes bring government issuers to the market. They don't have financial information. They have economic data, and we need to tailor that economic data to fit the disclosure regime in the mainland. But the point that I want to emphasise is that, largely speaking, the information we use for disclosure in the mainland is that information which is already publicly available offshore. We don't need to draft from scratch. The offering circular also needs to contain summaries of 3-year audited financial information, plus any subsequent semi-annual or quarterly accounts. The statements are disclosed in full on the interbank bond market disclosure platforms. The task that from what Mr. Su was saying, that needs a large team is translation. The offering circular and all the material that forms the key documents for the offering needs to be translated into simplified Chinese. But our issuers only speak often English, and sometimes their financial data is in another language, French or German. So we try to run drafts in English up until a point where we submit our documents to NAFME. They're then translated, and from that point in time, we run our documentation in English and in Chinese. That's a large effort, because the financial accounts need to be translated in full, including notes. So Rico asked me to speak about a case study. The one that I would choose is the most complex that we've been involved with, which was the World Bank offer of Panda Bonds denominated in special drawing rights. SDRs are a basket of the most traded currencies in the world, including at that time RMB, because it was about to be admitted to that basket. World Bank offers securities offshore pursuant to programs which incorporate by reference, and so we had to draw the material we needed to set out in the offering circular from that publicly available information, including drafting a management discussion and analysis section, which is usually a part of disclosure in the mainland. That did not cause any particular difficulty. The World Bank was happy with that because that information was already publicly available. And we were grateful for the support that we received from the mainland regulators in solving the quite difficult issues about disclosure of SDRs. Finally, I just point out that issuers have an ongoing disclosure obligation to make available to investors in the CMBM financial information as and when it becomes available during the tenor of a bond, together with any events which happen subsequent to the issue of a bond, which might affect the ability of an issuer to issue to meet its obligations under the bonds. So in conclusion, Rico, my answer to your question is, whilst disclosure may look a little bit different, largely the material is drawn from the information that issuers already publicly disclose, and I've not found disclosure to be a particularly difficult or onerous process. Thank you.
Thank you, Richard. I think that's very clear. Just further to that, because the thing is, we at ICMA published the Panda Bond report with NAFME of quite a few years ago to analyze the difference and also the consideration usually issues will take into when they want to tap the Panda Bond market. And your remarks actually remind me that such extra burden to do the translation, for example, extra due diligence, or the discrepancy between, the disclosure standards and due diligence between international and the Chinese, will stop certain issues to consider Panda Bond, or it's really not an issue at all?
Well, it's not an issue. We've obviously brought to market a large number of issuers, from AAA to lesser credits. Some of those issuers have been very concerned about the differences in law, but we've been able to demonstrate to them that the differences are, whilst the language might be different, the net result is similar. Conducting good due diligence is very, very key. disclosing information which offshore investors receive in this in the onshore market is very important. And then there's a process to explain to offshore issuers what the documentation process is, what the underwriting process is. But again, we are able to get our issuers comfortable that the differences are not that great.
Thank you, Richard. That's very helpful to know. Just to remind everyone on the line, we do have the Q&A function, and we may spare like 5 minutes at the end of the session to answer your questions. So do use the Q&A function. Yan-Bing, I want to turn to you again. Martin and a few panelists also just mentioned already that NAFMI released the new rules on the Panda Bond regime and the forms for the Panda Bond restrictions, particularly in September. So could you summarize the key takeaways from the new rules, and what does NAFMI intend to achieve in the big picture?
Thank you, Rico. Yes, indeed. We hope to provide more convenience for multinational companies to participate in the Panda Bond markets. And to this end, we have further optimized the Panda Bond rules for non-financial companies. In this September, we released the Panda Bond tier management rules and a set of registration forms. Under the new rules, foreign non-financial companies can be categorized as into two categories. One is a seasoned issuer, and the other is non-seasoned issuer. And companies that meet several conditions, such as financial status, transparency, and compliance, are the seasoned issuers. And seasoned issuers can enjoy several conveniences. First, in terms of registration, seasoned issuers have no quota limitation, and they can perform what we call a DFI registration, which means you can do a combined registration for issuing different type of Panda bonds, including such as MTM, commercial paper, and green bonds. And in contrast, non-seasoned issuers need to register separately for issuing the different kind of Panda bonds. And second, in terms of information disclosure, the information disclosure form used by the seasoned issuer are more closer to the international financial bond market practice, and they are basically similar to the information disclosure requirements of the EU regulated wholesale markets. So this is about the information disclosure. And third, seasoned issuer can form a expanded lead underwriter syndicates when they are registration. And for each issuance, they can choose up to 4 lead underwriters to doing the lead underwriting. And so we hope that through this optimization, the Panda Bond rules will be more will be closer to the international practice, and thereby facilitating more foreign companies to participate in the Panda Bond markets and expanding the opening up of Chinese bond markets. Thank you, Rico.
Thank you very much, Yan-Bing. I hope that will certainly encourage more issues, particularly the seasonal issuers, to use the Panda Bond more, and I'm sure it will further expand the opening of the Chinese bond market. Then, Richard, I want to turn to you again. With the introduction of the new NAFMI rules Yan-Bing just mentioned, how will the deal process change, and how would you evaluate the level of convenience the new rules can bring to issuers?
Thanks, Rico, and thanks to Mr. Wu for his summary. So just to step back for a moment. So what we've seen, NAFME very helpfully over a number of years now has issued rules which apply to particular types of issuers. From a mainland perspective, issuance is looked at from the perspective of whether we have a government, multilateral, or we have a bank or a corporate. And these rules are particularly helpful because they streamline issuances by sophisticated, not the right term, but seasoned corporate issuers. And so we look at this from a offshore issuer perspective. The starting point is to understand which category our clients will fall into, and that's not always clear cut. So whilst there are different rules for different types of issuers, there are similar themes, and there are particular rules for particular types of issuers, but largely speaking, the process is similar. But these new rules will make it much easier for those types of issuers that qualify. So the starting point is that issuers are able to issue all types of securities under one platform, including green-related or sustainable finance-related bonds, which is very popular at the moment. A lot of offshore issuers are very keen to issue green-related bonds in the mainland because that market is so deep and has such a good understanding of green-related finance. But this is all done in one registration. So previously, under other types of issues, we seek registration for one type of bond with one type of term and condition. Now we're able to apply for a program under which any type of issuance may take place, a lot like an EMTN program. And there are other relaxations that I'll come to in a moment. So the quick answer to your question, Rico, is that the new rules make it much more convenient for issuers who qualify as seasoned to issue Panda bonds. As Mr. Wu said, eligibility depends on a number of factors, including total assets exceeding 100 billion RMB, a strong debt to asset ratio, and other income-related ratios. So just to mention a few relaxations. So as I said, issuers can apply for a program which operates for 2 years. And the program is not subject to a program limit. In the past, the traditional approach is to impose limits on the amount of debt that can be issued under the program. These seasoned issuers will not be subject to a limit. The filing process is similar. So we make an application to NAFME that includes the issuer's constituent documents, the local rating that's been given, the offering circular, etc. But what is different, though, is that we do not need to set out in the registration application the actual terms and conditions of all the possible bonds that might be issued. Instead, that's left until the issuer has an actual issue to put onto the market. And there's also not a need upfront to specify the use of proceeds. So just to explain to some issuers that might be on the call who've not seen this process before, the use of proceeds is a very important disclosure in the mainland Panda bond market, because if the proceeds are going to be used offshore, it's the description in the use of proceeds which ensures that the issuer is able to remit the proceeds offshore and then to service the debt to pay the principal interest in return. So use of proceeds is a very important aspect of a Panda bond issue. The disclosure standard, NAFME has relaxed the disclosure standard for offshore seasoned issuers in comparison to onshore mainland bond issues. And that's particularly helpful. I would expect that what these seasoned issuers will do is simply replicate, as I described earlier, to your answer to your earlier question, the same disclosure that they use offshore in order to ensure that investors are treated equally and in order to ensure that the market is properly informed. As Mr. Wu said, there's greater flexibility in terms of the application or the appointment of underwriters. One thing that's a little bit different about the mainland market is that a fixed number of underwriters are appointed for the program, the life of the program, and then the underwriters appoint a syndicate to sell the bond, a little bit like the old style EMTN selling group arrangements. So the new rules allow some more flexibility about the number of underwriters, which is very helpful. One of the underwriters needs to be from the jurisdiction from which the issuer comes in order to be able to facilitate due diligence. So all of these changes are very helpful. They're very welcomed, and the industry is very grateful to NAFME for bringing these rules forward. I thought I might just very quickly just raise a few issues that issuers need to be aware of on the Panda bond market, which is a little bit different to what they're used to offshore. The first is that obviously our issuers, their accounting statements will be prepared in accordance with offshore general accepted accounting principles. And so there needs to be a reconciliation between their statements prepared under foreign GAAP and PRC GAAP, unless the foreign GAAP is equivalent. And Hong Kong is an example of a jurisdiction where the GAAP is equivalent. So reconciliation is important, and that needs to be undertaken by a PRC qualified accounting firm. The Big Four accounting firms qualify, so this is not a particularly difficult requirement to satisfy. Auditors that have written the audit report on the financial statements on which investors rely need to accept the supervision of MOF and to make particular filings with MOF prior to the issuance of a bond. Seasoned bond issuers are exempt from the complying with NAFMI's usual standards for bondholder meetings. But again, we would expect that offshore issuers will adopt their usual offshore meeting provisions for use onshore. In the mainland, offshore issuers are required to engage an independent offshore entity to safeguard investors' interests. This is not a trustee type structure from offshore, but rather more of an administrative role to ensure that bondholders' meetings can be held and to ensure that material events are disclosed to investors. Finally, PRC bonds are governed by PRC law, and we give assurances to our issuer clients that there's no substantive difference between PRC law and offshore law, including, for example, English law, in the way that bonds are able to be enforced in the mainland. And then arbitration, finally, the submission to jurisdiction clause that most offshore issuers are used to is replaced in the mainland by arbitration. And that's because we choose arbitration because we're given more flexibility around setting the rules that would apply in an arbitration. For example, the language in which arbitration is conducted, the identity of the arbitrators. The seat for arbitration will be in Beijing, and the rules that will apply are China International Economic and Trade Commission arbitration rules. So the new rules are very welcome. It's a natural development in the rules that NAFMI has already provided, and I know they'll be very welcomed by our corporate issuers. Thank you.
Thank you, Richard. I think that's very helpful, and also it's quite encouraging to see the NAFMI's rules in place, and we hope more frequent issues will consider the Panda bond. Levon, let's move a bit to another topic, which is the sustainability. As you know, the sustainability is always close to the heart of ICMA when we host the green bond principles, social bond principles, and sustainability linked bond principles. So as I understand, NDB has issued the green and also COVID-themed Panda bonds, as you just mentioned in the last round of the comments. So from your experience, does the sustainable Panda bond market have similar market structure as offshore markets? Does a green social Panda bond issuer tend to enjoy the same benefits, such as like a higher diverse investor demand and also tight pricing?
To be honest, it is still developing, but as we all know and really admire and the speed of the development of the Chinese domestic market, I'm quite sure that it will bring a lot of attraction to the Chinese investors to just really reach the same attraction to the sustainable formative bond issuance at the domestic markets in China. So with the increased demand, which would be initially coming from already existing investors, primarily having their separate portfolios for their sustainable investments, responsible investors, they could definitely develop into their domestic investor bases. There is no question about this. And we will exercise more demand for these issues, more liquidity, as well as tighter pricing.
Thank you, Levon. Bo, as an underwriter, what comments do you hear? Sorry. So, Bo, as an underwriter, what comments do you hear from issuers or potential issuers on the attractiveness of the Panda Bond market? And looking into the future, what regulatory development do you think will be most helpful for the Panda Bond market to further develop?
Right. I think we've been tracking this market for years, and we've witnessed that with the gradual development of the market rules and investors' side as well. There are more potential issuers who have interested to tap into the markets. So obviously, this is a very potential market. The market size is big. I think the like the global debt capital markets is now an outstanding volume of about 100 trillion something US dollar, and I think Chinese markets accounts for roughly like 15% of the world's total, with an outstanding volume of like 1.5 billion US dollars. So compared to the colossal overall scale, Panda Bond market accounts for a very small share of it. So I think the trend is the Panda Bond market is one of the a huge potential that both issuers and investors cannot afford to really ignore it. The Panda Bond market is backed by a huge and gradually maturing domestic market. So it is bound to expand as many quality international issuers and investors want to enter the Chinese market. I think another trend is that in the future, further improvements of the market infrastructure can be seen from the fact that more and more intermediaries are eligible to provide Panda Bond services. Like for example, international rating companies are already cultivating the market, diversifying the environment and logic of purely localized ratings. And meanwhile, local rating companies are also going into international world. So this is like a kind of a mutual learning experience. And also, I would outlook that in the future, like greater depth and width of the market would come. Like for example, publicizing and promote Panda Bonds to more investors, introduce international investors, enhance the market transparency, which including the process in pricing. And also in the future, just now, Mr. Levin mentioned about the concept of sustainability. I think sustainability development is gaining a foothold as well. So during the COVID-19 pandemic this year, both NDB and IIB issued their sustainable development bond. So a green development has been China's national strategy, and bonds with such theme will attract ESG investors. So at least they have a large potential to attract ESG investors, which will in turn boost the sustainable theme issuances. That's my opinion. Thank you, Rico.
Thank you, Bo. I think that's very helpful and also encouraging to see the further development in the Panda Bond market, which I'm sure the international issuers will appreciate. So we do have a few minutes to take the Q&As. Maybe I just pick up some of them. This is probably to Bo or Richard. What concerns issues have for accessing Panda Bond, including the choice against the CNH market? Maybe
Mr. Hsu, Well, from my perspective, I think that the CNH market, which is the offshore RMB market, was very busy a number of years ago, and there's still ongoing issuances. But obviously, the onshore market is a very large market, very deep market, and our issuers are very enthusiastic about going into the mainland market because of its size, because of the diversified investor base, and the potential for that market. So the leading issuers all look to the PRC market as being a place where they need to be in order to diversify their source of funding. The CNH market is certainly there, but it tends to be more of a domestic market. But the mainland market is really much more, will be an international source of finance.
Thank you. Then another question is to ask about the estimation of the total fees to issue a Panda bond. You know, compare with a typical offshore issuance. So, is anyone able to share? You know, or maybe just roughly, is it lower, higher, or Subo, or maybe Lavon?
Yeah, maybe. I think generally speaking, the fees levels in China is relatively lower than what is happening in the international markets. Especially, I mean, the fee levels are lower in the council's fee and in the banking fees as well. I think this is related to a comparatively lower scale of funding that you could probably right now you can get from a Panda, and also comparatively in for historical reasons, the fee levels in China for these intermediaries are lower compared to the international markets. So generally speaking, I would say the total fee levels compared to international issuance would be probably half or a third of the total fees happening. But that, I mean, really matters. I mean, varies from case by case. But as I mentioned just now from my points just now, that if you enter a new market, you're probably to choose the best team to serve rather than really just compare a little difference between the fees. I think that's lots of time saving and communication cost saving. Those essence really matters.
Thank you. I think the message is clear. As you know, we have outstanding teams sitting here for their consideration, and the good news is that the cost is not an issue. Move on. Do domestic investors have a big concern in accessing to the issuer or for a resolution in case of a default or other credit issues? Maybe lawyers or NAFB and Pink?
Well, I think that this issue, well, first of all, our clients are not going to default. So that's the first thing I'd like to say. But yes, this issue about the fact that issuers are from a foreign jurisdiction has been of concern from the outset. And domestic investors do need to accept that enforcement would need to take place, perhaps under PRC law. A judgment would take place in the PRC, and then that judgment would be enforced offshore. So there are already international norms about how you enforce debts cross-border in the same way that offshore investors are enforcing debts in the mainland. So I think that it is an issue. Investors need to understand the risk. They need to understand the jurisdiction from which the issuer comes in order to be ensured that they can enforce their debt in that jurisdiction. There's extensive disclosure in the offering circular about that risk. But my experience has been that onshore investors are willing to take that risk because they understand that at least the issuers that we brought to the market that they are going to be able to enforce the bond should they need to do so.
I would speak a little bit about the question as well. I would echo Richard about, of course, I mean, currently the issuers in Panda markets are very high quality, I mean, in credit nature. So yes, I mean, for many of the investors, they have a little concern about the credit risk. And that's why we can see good bookings and good orders from various kind of investors from many of the deal. This is on one side. And on the other side, I would mention that also you can see currently like Panda Bond is just a small portion of the total markets, which means that there's a lot of potential investors there to really discover and to develop. I think from a bank side, we are always keeping this effort to go on to really tap into those undeveloped investors, to have a market education, to tell them that Panda Bond is a kind of diversified asset for their portfolio, and to introduce the credit natures of those potential issuers and existing issuers to them, and make them interested in those issuances, and make them to push forward the work of getting credit lines. And I think these are measures which is meaningful for later developments. So probably in the scale of expecting that we're trying to make this smaller markets compared to the total into a larger one. So even if like the Panda Bonds, if later on they're kind of like 5% of the total market share, that would be a significant room for many of the higher international borrowers to come into the markets. Thank you.
Thank you very much. Unfortunately, we're running out of time and want to, give the stage to the second panel. The good news is that we may get back to you to those questions offline. And I want to take the chance to thank all the panelists again for your contribution and joining our discussion. It's lovely to have you. So hand back to you, Marty.
Thank you. Thank you very much, Rico, and thank you again to all the panelists. I think that was a really excellent panel. It set the scene with a discussion about the regulatory landscape, and also provided, I think, really detailed perspectives of the issuers, the underwriters, and legal counsel. Thank you also, everybody, for your questions. I'm sorry we couldn't get through them all. As Rico just mentioned, we will try to respond on the ones we weren't able to reach bilaterally. Let's move on to the second panel. So if I could perhaps ask Ian Bell, who is head of programming at Finance Asia, who's very kindly volunteered to moderate this panel. This panel really is going to be exploring in a little bit more detail the developments and the trends in the Panda Bond market. Very much looking forward to hearing what you and your panelists have to say, Ian.
Thank you very much indeed, Martin. Hello, everybody. My name is Ian Bell. I'm the head of programming at Finance Asia. For those of you who aren't familiar with our publication, it's been dedicated to covering the capital markets in the region for over 25 years now. I'm delighted to have been invited to moderate this important session on the developments and trends in the Panda Bond market, and I'm grateful for the opportunity to do so. Joining me today are 4 experts in the space from across the spectrum of Panda Bonds. So I'm very happy to introduce Boris Hainsell, the Senior Manager of Debt Capital Markets at Daimler, Christine Zhang, the Executive Director and General Manager of the Overseas Business Department at CCXI, and Mr. Timothy Yip, the Director and Head of Debt Capital Markets at HSBC China, and Ms. Fangyu Lu, the Senior Manager of Global Markets at ICBC. Ladies and gentlemen, welcome. Before we begin the session, I'd like to run a very, very quick poll just to gauge the audience's outlook on Panda Bonds. So it'd be great if that poll could be brought up on the audience's screen. It's a very simple one. What is your outlook for Panda Bonds, bullish or bearish? And while these roll in, I'd like to encourage our panelists before we start to ask questions of each other. And if you have any points to add at any stage following your fellow speakers' contributions, please feel free to jump in. And another reminder to the audience, it seems like you have been engaged in the previous panel with your questions. Please continue to do so. The speakers are all here for you. Okay, perfect. So, Timothy, I'd like to start with you. What are your current views on the investor perception of Panda Bonds in the current climate?
Sure. I mean, Ian, do you mean from an investor perspective or from an issue perspective? Where are we coming from?
Oh, so let's start with offshore perspective.
Okay, I mean, for investors, I think they're extremely thankful for what the PBOC and NAFMI have done over the last decade in terms of their carefully planning the steps ahead. So if you look at a series of foresight that's been shown by the regulators, starting off from QFII, RQFII, and then launching CIBN Direct in 2010, and then followed by the very monumental Bond Connect scheme in 2017, they're all steps encouraging foreign investors into the onshore market. So if you look at the rest of the global markets in Europe or in the US, where yields are relatively low because of the global macroeconomic environment, they find the onshore RMB bonds proposition extremely attractive because they're picking up on yields. So for example, a typical AAA rated 3-year bond in the onshore market at the moment would be anywhere between 3.9 to 4.2%. And that is guaranteed to offer you a much larger or heavier return compared to your Euro 3-year bond that may be negative yield or pricing at minimum yield depending on the credit. So from an investor's perspective, they are going global. They do have asset allocation everywhere, US dollars, euros, yen, sterling, and of course, RMB. That dovetails with what a lot of the major global indices have been doing, including Chinese government bonds into the indexes. And I think going forward, they will start to include more onshore credit bonds as well. So I think that would incentivize more investors to come into the onshore market. And if you look at historical issuances by some of the MNCs, Daimler, BMW, Air Liquide, or as well as from the SSA sector, whenever they issue in RMB on an after swap basis, sometimes from time to time, depending on swap levels, of course, it might be more attractive to offshore investors compared to where those names could issue in their home domestic currencies, i.e. foreign MNCs may be issuing at a premium on an after swap level. Therefore, from an investor's perspective, sometimes they would do the trade in terms of selling, for example, a Eurobond issued by a European multinational, and then use the funds to swap and then go onshore. So it's another way of them to come in. But in terms of access, the Chinese regulators have provided 4 methods, and really it's whatever works for the investors. So they have been afforded a lot of flexibility over the last many years.
Thank you, Timothy. And in your view, do you see a discrepancy when it comes to onshore and offshore investors in the way that they are treated, and how will this help define the market's ability to open up internationally?
I think that's a great question, Ian, and thank you for asking. I think from an HSBC perspective, because we are trying to be the nexus between offshore and also onshore, some of the feedback that we've gotten from international investors is that they would like to have, if possible, more transparency when it comes to the book building process. Because I think, as participants may know, in the onshore market, we operate on a bidding system. It's essentially a modified Dutch auction. Whereas in the offshore market, we do a typical book building process where the issuer, alongside the joint underwriters, they can determine a pricing strategy as book building goes along. So for a lot of the international investors, in particular from the central bank, official institutions, pension funds, they are trying to get their heads around how the onshore book building mechanics would work. For example, when an SSA comes to the market, there could be some central banks interested, but they're used to pricing revision in the context of 1 or 2 basis points, rather than the 15 or 20 that we're seeing or we could see in the onshore market. And when they run the internal approval, sometimes that's quite lengthy, and sometimes they prefer to put in an order whenever the book building starts. But then if you look in the onshore market, the book building period can be anywhere between 9 a.m. to 5 p.m. In the evening. And then the majority of the activity is actually concentrated between 4 to 5 p.m. just before book building closes. And again, that could pose a bit of issues for offshore investors, in particular if they had to hedge the investments as well. For example, they only have euros and their balance RMB bond using a cross-currency swap, and they need to do hedging on a dynamic basis. But again, we recognize that the efforts have been put in by the PBOC and NAFME. So for example, yesterday, NAFME promulgated more guidance on strengthening controls and standardizing book building. So for example, going forward, book building in principle should not last more than, should not go beyond 8 p.m. And that would suit, for example, international investors. So it would be a very gradual process. I don't think anybody expects the onshore market to connect with the offshore market instantly, but I think all in all, we are having a correct direction of travel, and it's very encouraging.
Thank you, Timothy. We'll come back to you in a moment, Timothy. But before we move on to the next question, it'd be great if we could get those poll results up to see the audience sentiment. So that's overwhelming. 87% say bullish. So it gives us a little bit of context for our discussion. Fang Yu, as we were touching there on foreign investors, I'd like to turn to you and ask whether you see any change on specific or unique trading features or habits for foreign investors in the market, especially in regard to Panda Bonds.
Okay, thank you, Ian. And it's truly great pleasure to attend this event. Thanks for ICMA's invitation. And I think just now some speakers have shared their views on China's bond market opening up from the issuance end. And actually, as the largest local market player and top market maker and one of the largest Asian banks, and ICBC has been trading CNY bond with more than 500 foreign investors from nearly 60 countries and regions, covering over 60% of foreign investors accessing this market. So next, I would like to share our observation on the trend of trading features by foreign investors, including the Panda bond. And firstly, the bond types traded by foreign investors are much more diversified. In comparison with CGB, dominating 52% of the total trading volume of foreign investors 2 years ago in 2018. In the first 3 quarters of this year, trading volume of policy band bonds increased significantly and took up to 42% of the total trading volume of foreign investors. And we also look at some foreign investors have touched the credit bonds. And further to that, despite there still small volume of the Panda bond, but we do see some investors invest them. Some Panda bonds, especially some Panda bonds issued by the well-known international names, very popular among the investors like Tenant, NDB, and FC, etc. Secondly, I think tenors have been extended and diversified. In the first 3 quarters of this year, 55% of the total trading volume reached by foreign investors went with bond with maturity longer than 3 years. Well, in 2018, the 70% Forex tenors less than 3 years. So we know that more than 50% of the Panda bonds issued in the first half of this year are 3 years. So now that that the investor preference of the tenor has been extended, we can foresee the enlarging scope of the Panda Bonds investor. And thirdly, there are more flexible trading strategies. Through CIBM Direct, foreign investors can trade interest rate and FX hedging instruments in the onshore market. So some international financial institutions also use the onshore instruments like IRS and CN1 FX forward or CCS to hedge their risk when issuing Panda bonds. Besides, some of foreign investors also use secure lending and borrowing and also repo for liquidity management. Generally speaking, we think the foreign issuers and investors at home abroad are all becoming more active in this market than ever. And we believe this will in turn boost the continuous improvement of the local market. Thank you, Martin. Thank you, Ian.
Okay, thank you very much indeed. Christine, I'd like to now come to you. Do you have, before I ask you my opening question to you, do you have anything to add to Timothy or Fang Yu's points? But after which I'd like to ask you about the credit performance of the Panda bond market and the sort of the rationale and reasons behind that.
Thank you, Ian. Good afternoon, everyone. This is Christine from China Chengxin Credit Rating Agency. Briefly introduce ourselves. We are the largest and we have the greatest market share in terms of Panda bond rating. And so talking about the credit performance of the Panda bond, actually this market is positioned for highly qualified foreign issuers with long-term RMB needs. And if we're looking at the international scale of the foreign issuers, most of them falls into the investment grade, but it's also becoming more diversified because we have noticed that from 2016 to 2019, actually the group of the issuers that fall into the BBB range increased from 50% to 70%. And also, if we're looking from the local scale rating, we have seen that so far nearly all the public issuers in the interbank market were rated AAA. And if we look at the exchange market, there is the first AA plus rated public issuer in the exchange market in 2017. So I think the reason behind it is first, as I have mentioned, is designed to attract those foreign issuers with good credit quality. And the second is because of the specialty of the Chinese bond market, because despite the continuous opening up of this market, the Chinese bond market is still largely a closed and regulated market. And also the investor protectionism remains to be enhanced, and there are few defaults ever have happened before. So the entrance of the new issuers the regulators are quite cautious about the new entrance of the issuers. And despite that we're looking forward to see a more diversified issuer pool, we do not foresee that the credit nature of this market will be changed in the short term. Thank you, Ian.
Thank you very much. I'd like to stay on you for a second there, Christine. So in terms of the methodology behind the local and international rating agencies, how do you approach rating overseas issuers in comparison to what you would normally do for a domestic firm? Or
Thank you. So when talking about how to rate a foreign issuer, the most often asked question is there a mapping relationship between the international scale and the local scale? I think the question lies because the foreign issuers, they have difficulty in rating the local scale. But from our point of view, I think there's never a direct mapping relationship between the international scale and the local scale. And you can also not compare the rating results between different rating agencies. Because the reason behind it is that whenever we are dealing with a cross-border business, there's always discrepancies. And for Panda bond market, there's a discrepancies between the foreign issuers and the local investors. And for that reason, we always believe that except for those sovereigns and MDBs, for those corporations and financial institutions, we do have to compare them with the local players in the same industry, both from the basic credit assessment level and from the support level. And so in that way, local scale rating samples and experience is important in terms of making an appropriate ranking. And also we need also to have a global view because the relevant importance of the industries and involvement of the industries vary across different countries. So in that way, the situation could happen for the same issuer. They have the same credit if they have the same credit rating in an international scale, they may have different rating results in the local scale. So I think that's a common thing for us, because and that's also why we need a local credit rating agency to bridge the information asymmetry between these discrepancies.
So there's been a number of recent regulatory developments that we heard of in the last panel discussion. Will the difference, will that worry any potential international issuers who are perhaps not looking to be rated differently, or perhaps more negatively by a local rating agency, as they have done by their international counterparts already?
Yes, but so far we have witnessed that, like in the tiered management role issued by the NAFME, there's no clear regulation in terms of the credit rating. But we do believe that in the real practice, whether the credit rating both in international scale and in the local scale is a great important factor to be considered, because as I have mentioned, that from one point of view, this market is still a regulated market. The regulators are quite cautious in terms of the new entrance of the issuers, especially about the credit qualifications. And so I do believe that this will make the credit rating is still essential in terms of the entrance of the new issuers. And except for those issuers that have the highest credit rating in the international scale, like the AAA, I do believe all the others, they do still need a credit rating. Yes.
So thank you very much indeed. So I think it's now probably time in the conversation to switch the conversation to issuers. So Boris, as the only issuer on the panel, first of all, welcome. But would you be able to briefly introduce Daimler's history in issuing Panda Bonds? I've been the first international firm to do so in 2014.
Yes. First of all, thanks for organizing this great event. And as we have already heard from various speakers, and as you quite rightly said, Daimler was the first one who tapped the corporate bond market in China. That was back in 2014. And if you look at the period since then, we have issued another 25 Panda Bonds in the market, with a total volume of a little bit more than 60 billion RMB, which equals to 8.5 billion, roughly 8.5 billion euro. That for itself speaks for a great success for that market. In that regard, it has already been mentioned by various speakers. We have to name in particular NAFME, who with their policy have paved the way for doing so. So all in all, they have done a great job. And we should also not forget this market is, when we look at the corporate bond market, only 6 years old. So it's a very short period in which we have seen tremendous changes. And also with a new and latest regulation, we have to say it has moved more and more to an EMTN-like program style, which very, very much helps the issuers. And what we have also heard from other speakers, we can only encourage issuers to tap the market. But we have also heard from the investor side, there's a great interest also to expand the investor bases more also to the international investors.
Okay, and in terms of your future outlook in the market, could you touch on that a little bit?
Yeah, I'm quite happy to see that 87% of the listeners here are quite bearish, which is also a view which I would share for various reasons. We have already heard that the Panda Bond market at the moment accounts only for a small portion of the market. So there is huge growth potential. And if we look at not only at our sector, but I would also expect our sector and other sectors, there are plans to grow also in future. And what we should also not forget, it was just at the weekend where 15 Asian countries signed the RCEP agreement, which will possibly also boost the growth in that region. This all needs to be financed. And if we go back, what is the idea of the Panda Bond? Is to give the issuers the opportunity to fund their business in China. And if you look at Daimler, we really stick to that idea. So whatever we raise in Panda Bonds will exclusively be used to fund our business, our growing business in China. And there's no intention to change this. And for us, the Panda Bond is definitely one of the main pillars in that market to fund our business. And we rather expect a further growth and higher volumes in future to raise in the Panda Bond market.
And obviously, from what you've said, Daimler is very, very bullish on this. But do you have any issues with the market at all?
Yeah, I have to say, NAFMI has done a great job. That's what I said before. If you ask me now, is there anything in future which we possibly would like to have changed? There are a few things which has been pointed out, I guess, by Richard from King & Wood. Most of the market is similar now to the other markets. Nevertheless, if you look at the marketing process, it's a relatively long process, and it should be in the interest of the investors and also the issuers, possibly to shorten that process. So that's possibly something which we would appreciate if we could get to a marketing period which is more the international standard. The other topic which we have to wait and see whether with the next regulation change will give us some relief is we have not reached that point, but at the current stage we are subject to the foreign debt quota, which could at a certain point in time limit ourselves. So if foreign debt quota in future possibly will either be moved upwards or will be lifted at all, that would definitely be a big help for our future considerations.
Okay, thank you very much indeed, Boris. Timothy, on Boris's point, I was wondering how you would respond to some of the points that he made, and what would you make? And would you like to add anything to them? I guess.
Yeah, I think I do agree wholeheartedly with what Boris has said. They're great points. And I think from an issue and also investor perspective, I mean, the next stage would be how do we extend tenure of the Panda Bonds market? Because if you look at the issues so far, with the exception of a handful select very prestigious issuer that's able to go up to 5 years, the majority, if not all, of the issuance have been concentrated in the 3-year tenor or below, some are even the 1-year tenor. Because a lot of MNCs, as Boris has pointed out, they like to raise RMB financing to optimize their investments in China, to optimize their asset liability management structure, and they are committed to China in the very long run. And we're talking about raising financing, for example, 5 years, 10 years, or beyond. However, at the moment, the onshore RMB bond market is not there yet, because even for domestic issuers, they would find it challenging to go beyond the 3 years. 3 at the moment is the sweet spot. And in order to make it the next phase, foreign investors and them alone would not be enough to support longer dated issuance, which some of the MNC might undoubtedly want. We would need some of the Chinese insurers to be able to invest in Panda Bonds. And I think at the moment they've been very reluctant because there is there's no complete clarity in the regulations whether they can invest in Panda Bonds at the moment. So this is why it's very difficult to move beyond, let's say, the 5-year points. But from time to time, HSBC does see demand from issuers that want to go beyond 5 years, and ideally, 7 years or 10 years or beyond.
And thank you, and thank you. I know that in our call earlier, you did touch on tenure. So would you like to build on anything that Timothy just said there?
Okay, just now I think the Boris also said you asked the Boris how to look at the market infrastructure of this market in future. And actually, I think just now the NAFMI's Yan Bing has responded that actually in this year, PBOC and NAFMI issued a series of guidelines for making the Panda Bond issuance more convenient and more information disclosure more transparent. So actually, and from the investor side, and we can see this market is becoming more and more open. Just like the before that, ISTA agreement cannot be accepted in this market, but this year ISTA agreement can be selected freely by overseas investors if you want to treat the risk hedging tools in this market. So we believe not only on the investment side and on the issuer side, though this market will also be more and more convenient and efficient for foreign investors.
Okay, thank you very much. Thank you. We've just had a couple of questions from the floor, so I'm keen to involve them as much as we can and encourage other listeners to ask as many questions as possible. We've had an anonymous question say, is onshore use of proceeds mandatory for Panda bond issuers? Thank you. Anybody can take that. Perhaps I will go to Timothy.
Well, I mean, according to the guidelines, I think they should be used in accordance with the relevant laws and regulations. I mean, there's nothing in writing which prohibits the use of proceeds offshore. So it really, sometimes it's a case-by-case discussions with the relevant regulators.
Yeah. Okay. Thank you very much. And secondly, we have a question saying, how do you treat the withholding tax on Panda bond coupon payments? Is it possible to benefit from a full exemption, and at which conditions? So anybody wanting to take that, maybe Timothy again, or Fang, you should you have a stab at that one? Maybe perhaps Timothy.
Sure. I mean, I think we're talking about from the investor's perspective or from the issue perspective. Because from the investor's perspective, yeah, because from the issue's perspective, I mean, the State Council has released guidelines basically to waive all withholding taxes or interest or capital gain tax in terms of investing in Panda bonds for 3 years, and that will expire in 2021 in November. But from the issuer perspective, I mean, they should, because we are coming from different jurisdictions, it really depends on the local jurisdiction and whether they have to pay that withholding tax. And also whether they are transferring the proceeds to an onshore subsidiary. Because if that's the case, then the onshore subsidiaries will also have to pay withholding tax because they're effectively taking on borrowing from offshore.
Okay, perfect. Thank you very much. Okay, so Fang Yu, I'd like to now move on and ask you to share some views on the second market liquidity improvement in recent years in the Panda bond market. Is the secondary market liquidity of Panda bonds different from other onshore bonds?
Thank you, Ian. And actually, I think the Panda bond is one of the bond types in China interbank bond market. And if we look at from the whole picture, currently most of foreign investors still focus on the rate bond. And actually, and with this, with years of development, liquidity of this market has been much improved, in particularly with liquidity on the round CGB and the CDB. And this substantial advance of the secondary market liquidity is achieved by joint efforts of all parties. And the first is from the overseas influence, driven by the high level of the 10-year CGB and the US Treasury spread. Foreign investors have been increasing CGB holding for 20 consecutive months. The trading volume of foreign investors in CIBM reached 7.5 trillion yuan, up by 76% year on year. The deeper involvement of foreign investors further activated market liquidity. And the second is the optimization of the issuance mechanism. Since the 2019, the MOF has increased the number of the CGB reissuance. When for different tenor CGB, the frequency of the each bond issuance has been increased to 2 to 5 times, and the balance of each bond has been increased to 250 to 300 billion yuan, much larger than as compared to 100 billion yuan in the past. The third is supportive measures for market makers. In 2017 and 2019, MOF and the China Development Bank both launched the flexible purchase and sale mechanism. That means that the market maker can purchase or sell specific CGB or CDB with the two issuers frequently. As to Panda bond liquidity, the liquidity of the Panda bonds in the secondary market is not significantly different from that of the other credit bonds issued by domestic entities. The bid-ask spread of the Panda bonds issued by well-known international names are comparable with those issued by top Chinese companies. And as for investors type of the Panda bond, investors of the Panda bonds are mainly policy bank bonds, state-owned policy banks, state-owned banks, joint stock banks, also the fund companies, the asset management companies with strong investment capacity. It of course includes the foreign financial institutions and sovereign funds. Thank you.
Yeah, thank you very much indeed. Okay, so I mean, we do to a certain degree have a sort of pandemic-shaped elephant in the room. So, I mean, Christine, I wanted to ask you how, in your view, COVID-19 has affected the Panda bond market.
Yes, so in total, we do consider the impact of the COVID-19 on the Panda bond issuers as a short-term attack, because as I have mentioned that most of the Panda bond issuers, they have high credit quality, and even though they may suffer from a short-term glide in terms of profit and revenue, we do believe that their financing channels remain smooth. So that will leave their debt repayment ability unattacked. And for many of the sovereigns, actually, they suffer a lot from the COVID-19. We have witnessed a lot of downgradation in terms of their sovereign ratings, but we could see that since the second half of this year, many of them started to recover. And yes, but for some weak sovereigns, especially those with high debt and low external liquidity, we do believe that they may be, especially when they are downgraded, we do believe that that will hinder their process in terms of new entrance into this Panda bond market. And also for some specific industries, industry players, they may also suffer from the COVID-19 in terms of their demand and also in terms of their asset evaluation. Is for example, like the automakers and also for these real estate companies. So for these kind of companies, we do have to see how long will it take for them to recover, and also we have to see whether their financing channels are smooth. So yes, thank you.
Thank you very much. And I mean, okay, fair enough. And Timothy, from your side as well.
From our perspective, I think COVID-19 has been challenging, or has made everything challenging. But I think we have passed the worst, at least from an onshore China perspective. And I think Panda bond issues, if they have financing needs going forward, they will continue to invest in China. Because if you look at the infection rate or the pandemic has been largely, thankfully, brought under control within mainland China. So some issues that we've been speaking with, they're already looking ahead in terms of financing their capex and also the investments in China for 2021 and also beyond. If you look at it, as some of the panelists have mentioned, they have issued Panda bonds previously, and given the tenor composition of 1 year or 3 years being the fulcrum of the issuing volumes, some of them will be coming due next year. So come hell and high water, they do want to issue more Panda bonds to refinance existing maturities. And secondly, a point about investor liquidity is something that foreign investors value quite a lot. And what they want to see is actually repeat issuers in the market. Because one point that we have not had a chance to touch up on is really the infrastructure for investors. Because the onshore credit bonds, especially in the bank market, they would need to be cleared by the Shanghai Clearing House. And for some of the foreign investors, they do not have that at the moment. Because if they started off life investing into rate products, what we're talking about is China government bonds or China Development Bank bonds, then they would have opened an account with the CDCC rather than the Shanghai Clearing House, the SCH. And if the issuer cannot demonstrate or give them enough comfort that there will be a repeat issuer, from time to time, it does seem a lot of work just to open a Shanghai Clearing House account for the sake of one bond issue, which can be anywhere between 1 billion to 2 billion RMB. So I think that sometimes impacts foreign investor demand as well and feeds into the large discussions on liquidity.
Thank you very much. I mean, there's a couple more questions coming into the floor, so this is very good because we get to interact with our audience. I think maybe Boris, I will send this one to you, given your experience as an issuer. Is there arbitrage between Panda Bonds from issuers and their other issuers outside of China?
From an issuer's point of view, as I said before, we will use the proceeds exclusively in China. And possibly at the moment, it would not even work for arbitrage. I guess it's more from the investor's point of view, what Timothy explained before. That's possibly where you would benefit from an arbitrage. But as I said, from our end, when we talk about arbitrage, then possibly we will not only look at the Panda Bond market, but also at the dim sum. But to be honest, and that's why we still think the Panda Bond market, that's a key market. Dim sum market is a kind of niche market. We will never be able to raise funds to the extent which we need to fund our business in China. And from time to time, there's a volatility in that market. There was possibly a time when it was a little bit cheaper than the Panda Bond market, but to be frank and open, we very much concentrate on the Panda Bond market because that's where we have to raise the funds. And from that point of view, is the arbitrage very much limited as far as the issues are concerned.
Okay. Timothy, do you have anything to add there? Because we have another couple of questions in from the floor, but it would be interesting to hear your thoughts if you had any that you haven't already made.
I mean, just wanted to add to Boris's point because currently what we think is that others, the MNCs, they come to the Panda Bond market not for the sake of arbitrage funding. I think that is the wrong way to go about it because it's, sometimes, it's a very, committed process. Issues should be in this for the long run because they're committed to China investment and they want to optimize their funding mix about localized funding and localized liabilities. So far for the last 5 years, since the market began, we see the massive influx of demand from MNCs that has got long-term commitment and investment in China. And I think that should be the correct way to view about it rather than seeing the onshore market as an arbitrage.
Yeah. Thank you very much. So another question from the ADB from Jonathan Grosvenor was, and this is a question of tenure again. ADB's first two Panda bonds in 2005 and 2009 were 10-year bonds. Now we see that issuance is concentrated in 3-year tenors, mostly because banks are the most prevalent investors. What can be done to crowd in more asset managers and long-term investors so that longer tenors open up to issuers? Fang Yu, would you like to take a stab at that one?
Okay, I think it's a good question. Actually, actually, it's our market authorities. What our market authorities is doing, and you can see since the 2016, this market was opening up to more types of foreign investors. Before 2016, only the foreign central banks, sovereign institutions, and foreign commercial banks can invest CNY bond in this market. But after the 2016, nearly all types of the overseas financial institutions, including the asset managers and the long-term investors, can trade CNY bond in this market. So we believe that's just like I have mentioned, and in future, and we believe more and more foreign investors will focus on the Panda bond and invest Panda bond. Yeah.
Thank you very much. I mean, we are running out of time, unfortunately, but oh, sorry. Please go ahead. Please go ahead.
And I just wanted to supplement what Jonathan's questions and what you're saying. I think it's all about investor education because you want domestic and also foreign investors to extend their credit assets to out to 10 years. And I think it will be a very gradual process because if you look at the data, even for domestic issuers, right, pure domestic, I think less than 3% of the entire market is at 10 years or beyond. Only the very select top-notch Chinese-owned SOE can venture out to 10 years. And because investors' confidence is just not there for longer dated assets, they feel comfortable at the 3-year part. At the same time, they want to match their assets with their liabilities, and therefore, by the very definition of this, asset managers, fund managers, they will also to go out and find people willing to part with the money for a very long period, i.e. 5 years and beyond. So it's all about investor education and also to get them comfortable that this issue, for example, the ADB, they will be around, they've been around for more than half a century, and they will continue to be around. So I think the crux of cracking this would be really educating investors to take a much longer term view, because admittedly over the last decade, I think some of the Chinese investors have been focusing on the short to intermediate end, i.e. 3 to 5 year time horizon, rather than thinking beyond that.
Thank you very much. I mean, there's another question actually that ties us back to the COVID question, but in a slightly different way. And a number of the long fund asset managers that we've been speaking to around investing in China in general have been saying that the response to the pandemic really has shown the country to be able to to sort of set itself up as a future safe haven investment source. Do you think that, given what COVID has perhaps shown weaknesses in countries around the world, sovereigns like France will be keen to issue Panda bonds? They say France explicitly in the question. It's not me picking on. But do you think that foreign investors will use Panda bonds to show their commitment into China as a secure and safe market for business growth that can protect against future crises? Anybody takes that. Maybe Timothy, you were leading in, and then perhaps Christine.
Yeah, I think so as well, because I think given the pandemic, it just made people much more aware about the need to diversify their funding. And as panelists have said, I mean, China is the world's second largest bond market already. So if you already hit the euro market, you've already for your buckets in the US dollar market. I think the natural progression of being a very responsible issuer would be to tap into the domestic RMB bond market. And for some of the issues we've spoken with, they actually began experimenting with RMB as a currency for funding way back in 2011 when the offshore dim sum bond market started. So again, we've seen a lot of the foresight demonstrated by the regulators and also by the issuer, starting with offshore part and then gradually as an evolution or revolution moving to onshore. So it makes sense.
Yeah, thank you very much. So we're pretty much out of time, and there are a couple of other questions from the floor, but I'm not sure we'll have time for them. So I'd like each panelist to go around in a circle and really give their number one trend as to the reason why they think the audience is bullish on Panda bonds, and their one sentence outlook for the growth of the market in the future. So perhaps Boris, we'll start with you.
Yeah, no, based on the discussion we had here, I guess, and as I mentioned before, there's a huge potential. If we look at the portion Panda Bond is accounting for at the moment, there's a huge portion, and I'm pretty convinced Panda Bond will be one of the main sources to fund business in China, and there's more to come in the years to come. So from that point of view, as I already said, I share the view the audience have, and we are pretty bullish. We just have to make sure when we talk about the market and also the discussion we just had about the tenor. Also, we are not in that tenor bracket of 5 and 10 years, because our underlying business is more towards 3-4 years. It shows the necessity to make this market broader, deeper, wider, and that's why it's so important, really, on both sides, on the issuer side, on the investor side. We need to encourage everyone to join in that market, and we are convinced that this is going to happen.
Okay, thank you very much, Boris. So Christine, very quickly, I think we've got under a minute to go, so please be concise. Thank you.
So from our point of view, the Panda Bond market is still in its pilot stage, and it has huge potential. And we know that issuing Panda Bond will open your way into the second largest bond market in the world, expanding your market awareness and corporate image. So I think if you value Chinese market, Panda Bond is worth trying, despite all these difficulties. Yes.
Yeah. And it's become so. I mean that's only been in the last 5 years. It's remarkable. Fang Yu, please.
Okay, and look ahead, and we look forward more robust market infrastructure, and we hope that the legal forms and the documentations, as well the trading and settlement rules of this market, will be more internationalized, and we also hope the credit bond market has been more improved, more in future. Yeah, thank you.
Thank you very much. And finally, Timothy, to close us off.
Yeah, absolutely. Thank you. Three major points. There is enormous potential in this market, world's second largest, and the support from the regulators is just unquestioned. It will always be there for this market. And secondly, is diversification of the funding base. There are plenty of investors waiting to be tapped into. And number three is really keep an open mind, because sometimes it's not easy having a documentation in Chinese. But do persevere and really just get over the mental barrier, because this market does work.
Well, thank you very much, everybody. I see that Martin's shown his video. So, yeah, thank you so much indeed for a very dynamic conversation. And I'll hand it over to you, Martin.
Well, thank you, panelists, and thank you, Ian, very much for leading us through what really was an excellent panel. I'm sorry to say that we have come to the end of this webinar. We could have gone on for a lot longer. There's some very exciting news coming out today. It's incredible just how much this market has developed during the last 5 years. But there's still further to go. I think the comments from the last panels about the immense potential in this market are very, very relevant. And I think I'd also like to commend NAFME for the way that they've brought increasing definition into this market and really clarified a lot of the processes around it. And the point of a seminar like this is to help that familiarization and process with the international community of investors and issuers, so that they start to, or they continue to understand more about the way that this market operates, so that we can move it from a basis where it operates at less than 0.5% of the Chinese interbank bond market to something significantly more in the future. And it doesn't need much percentage change for this market to multiply in size. And I think we've seen from Boris just how important a market it can be in the funding program of major international companies. So again, I'd like to thank everybody who's participated in this conference. I'd particularly like to thank the speakers. I'd like to thank the panelists very much for your insights, and very much like to thank the participants for joining us today.